Okay, thank you very much for everybody joining. For us, it's Thursday night. It's morning on the East Coast in Canada, and very early in the morning on the West Coast of the U.S. and in Canada as well. Afternoon in Europe, etc. So I can see there's people. It looks like from all over. So thanks for your time. My name is Robert Chadwick. I am one of the co-founders of America Mortgages. If you're not familiar with America Mortgages, we launched this brand from Global Mortgage Group to be much more specific and much more focused strictly by providing foreign national and expat financing in the US. That's it. So 100% of our clients are clients just like yourself, clients that are living abroad somewhere in the world and looking to purchase or refinance or equity release US real estate. We, over the last, I would say, month and a half since we launched America Mortgages, we've had absolutely fantastic response. Our team worked diligently to get this great looking website up. There's more things that are going to be added. It's going to be much more interactive and much, I guess, easier to use. But one of the things that we're super excited about is we've launched a lot of new programs and a lot of new initiatives that serve, again, very, very specific client, very focused. So I'll kind of touch on these new programs that we have. I'll touch on the qualifying standards for both US expats and for foreign nationals. And then we'll just give a very short brief of what we're looking to do and what we're looking to accomplish in certain markets. And then we'll open it up to questions. There is quite a few people on now, which is fantastic. So right now, in order to qualify for a mortgage as a foreign national, so we'll start off as foreign national, then we'll work our way to US expats. So to qualify for a mortgage as a foreign national, all of our loan programs do not require you to have US credit. All of our loan programs are super flexible. We can use credit from your home country. The credit has to be a certain qualification, which means you need to have at least 24 months of credit history on two accounts. And with a high credit limit of $3,000 or the equivalent of 3,000 US dollars. Now, this was always a little bit of an issue because there are some countries that do not have credit reporting agencies. Or there are some clients that we've seen, even some very wealthy, affluent clients that just don't access credit, or they don't have credit, or unable to verify it. So I'm really happy to announce that one of our loan programs that we just came out with does not require any credit, meaning that the credit reference letter or the issues that we would have from certain countries or the inability to be able to get it, it's gone. Now, anytime you add a little bit of layer of risk, such as not having credit history, it does add a little bit to the pricing, but it certainly doesn't make it non-market. So all of our loan programs are all market interest rates. So that's a pretty exciting addition, and I think it's going to help a lot of people in a lot of countries that we haven't been able to assist up until now. So, but in general, a foreign national loan, we don't require U.S. credit. You can qualify off of your foreign earned income. our qualifications are very straightforward. Because we're doing loans, a client could be from Taipei, excuse me, a client could be from Taipei, or a client could be from Toronto. They're going to provide the same type of paperwork, the same documentation, to make it very uniformed and make it quite streamlined in order to get qualified. So for income verification, we're not going to do a deep dive into your tax returns. We're not going to ask for your pay stubs. We're not going to ask for P&L, all of these things. And these are for the standard US mortgage loans. All we're going to require, if you're employed, we want a letter from your employer. If you're self-employed, from your accountant. And that just merely states your last 2 years' income and your current year to date. That's it. So it's a quite an easy hurdle to get over. It's not a lot of paperwork. It's a pretty simple fix. However, if for some reason, and this is not uncommon, if for some reason you're self-employed, or your employer just will not provide a letter such as this, we can go off of strictly the rental income of the property. Meaning that not only do you not have to give credit, or if you don't have credit available, we have a program for you. But if for some reason you are not able to verify your income, we are going to use the rental income generated from the property. That's it. So we've been able to add these two programs. I think that they're fantastic. It really opens up the investors market, regardless of where you're at or where you want to purchase, with these additional new benefits. So on these programs, whether you're verifying income or you're not verifying income, we can get up to 75% loan to value on a purchase and 70% on a refinance. That's whether you're pulling cash out or just trying to reduce the rate. Fantastic loan to values, super high, super aggressive programs. The other qualifying requirement for these programs is the verification of funds. Now, this is required, obviously, for AML purposes. We just need to see that the money that you're going to use in the transaction, and this is primarily a purchase, the 25%, if you choose to do the maximum loan to value, we need to see where that money came from. It's a very simple show or trail. We need to follow that trail of money for a minimum of 60 days. So to kind of put it into examples, if the money is coming from your bank, and that bank does not have to be in the US, it can be anywhere in the world. So if that money is in your bank, we need to see that it's been in that bank for at least 60 days. So that would require 2 months of bank statements. If for some reason the money is generated from the sale of a property back home, an inheritance, stock sale, crypto, whatever it is, perfectly fine. All we need to see is where that money was generated from, and a 60-day trail of it. It doesn't mean that that money has to be sitting in that bank account for 60 days. All it means is we need to be able to follow the money for a 60-day period, regardless of where it comes from. So again, fantastic program, quite easy to qualify, high LTVs, etc. So that covers the foreign national qualification. So just to kind of touch on it again, no US credit required. The income can be documented with a letter, or we can go off of strictly the rental income of the property, not requiring any income documentation. And we need to see the seasoning of funds, where the funds originated from. Basically, besides the application, identification, and so forth, it's quite easy. This is in all 50 states, in all counties, and The loan amounts for U.S. citizens, I mean, for foreign nationals, minimum loan amount is 100,000 US. Maximum loan amount, for a standard loan, you're looking at about 3 million, but we've done in the tens of millions on property. So if you have larger assets, can definitely assist. For the US citizen, the expat that's living abroad, much like myself and my business partner, and most of, actually all of the loan officers that we have, the qualifying standards are identical to you walking into your local bank. If you were living and working, say in Boston or LA or wherever it may be, and going and applying for a loan. We try to make the process as simple and as transparent as it would be if you were working with your local banker. Yeah, I think one of the real advantages that we have at America Mortgages, as opposed to some of the large banks that may be able to provide financing in certain states or requirements, everybody that you work with here, you're going to have their personal cell number. You're going to be able to call this guy, you're going to be able to message this lady, whatever it may be, whenever you need a question or whenever you have a problem. You're not going to be stuck on hold. You're not going to get an automated reply. You're not going to get a chat bot. It's a live person, and this person is going to carry your loan all the way from the application all the way to closing, working directly with you. So on the qualifying for US expats, again, similar to what you would get if you walked into the bank, we need 2 years of tax returns. We need that you have to have US credit. And we'll kind of go into if for some reason you don't have these things at the end, but you have to have US credit. Right now, the minimum credit requirement in order to qualify for what you would consider conventional financing, you need to have at least a 760. The minimum requirements have really increased post-COVID, and really even a 760 credit score, which by all means is fantastic credit, is still considered kind of on the lower spectrum. So once you're up over 800, you're absolutely solid, but it's something that you want to take into consideration. So 2 years tax returns, pay stubs. I know a lot of people don't get the standard pay stubs. It's fine. We can completely work with that. One thing that I think you'll find very appealing is we do not require you to have W-2 income. So obviously most foreign businesses, if you're working for a foreign company, they're not filing a W-2 on your behalf. So if you go to a conventional bank or a standard bank, or even a lot of these large online websites, they just can't help you, or you don't find out they can't help you until you're at the very end. So with rates, we are identical. There is no markup. There is no additional premium, just because we're dealing with US expats. So foreign earned income, pay stubs, bank statements, all of this is completely acceptable with all of our programs. Now, the turn times on these US citizen loans can be a little bit longer, but it's still very much within the market. So on a normal purchase right now, depending on what city you're in, it's very, very competitive. I mean, as you probably have seen, if you're looking, there are people outbidding each other for properties. So normally the realtors will put a very tight closing, 30 to 45 days. Obviously, we prefer the 45 days, but we've made the signing process, and this is both for US citizens and for foreign nationals, the same. But we've made the signing process really, really easy. There's 4 ways to sign, depending on where you live. So one, and the most recommended, just because it's the quickest and the easiest, is the power of attorney. So power of attorney is very specific for that transaction. It's what it does is it allows somebody that's a trusted advisor, family member, whatever it may be, to sign on your behalf just for this transaction. This will allow us to basically, draw the closing documents at the very end process of the loan and fund within like a day or so. So super, super quick, super easy to do it. What's actually quite nice is, say you're buying a property in North Carolina as an example, and your sister lives in Los Angeles. Perfectly fine. They don't have to be in the same state. We can arrange what's called a mobile notary. They drive up to the house or wherever it may be, and they'll do the signing for you on your behalf at the convenience of your power of attorney. The other way is the U.S. Embassy or the U.S. Consulate, depending on where you live. Again, very straightforward. You'll receive all of your closing documents, you print them out, you take them down to the embassy. Whoever is your loan officer, whoever is assigned as your loan officer, will actually review these documents with you prior to your signing. So you know exactly which documents need to be signed. You take the package down to the embassy and you sign the documents in front of the embassy staff. They notarize each document. It's probably about, depending on the lender, it's approximately 10 pages that need to be notarized. Embassy is not, they're definitely not they're not free. It's about $50 a chop. So you're talking about around $500 to get the notarized at the embassy. Another way, and this is not for every state. Some states are allowing it, some states are not. Some counties are allowing it, some counties are not, but we'll definitely assist you with that. We're very, very familiar because we're doing loans all across the US, is something called a RON, which is basically what we're doing now. It's a online notary where you're signing on a video chat with the escrow agent. They're watching you put the documents into the FedEx package, you seal it, and you're done. So super quick. We do have that time difference or the delay because you do have to mail the documents back. And depending on where it is or where you are in the world, it could take 48 hours or maybe even 72 hours in order for that escrow agency to receive the documents back. The fourth, and this is not in every country, but it's in a lot. If a country is a member of the Hague, then you can actually go to a local notary. So make an appointment at an attorney or whatever is able to notarize official documents in that country. They will notarize it as they would a mortgage document in their own country, and then they would send it to the high court or whatever the equivalent is in that country, and they will send the documents back. So 4 ways to do it, which helps us immensely with being not only being convenient, but being able to be very, very competitive when it comes to closing times. I think that is probably everything on the qualifications for the standard mortgages. So that would be, again, foreign nationals, US expats. Oh, I'm sorry. On the US expats, we can get up to 80% loan to value on a second home or an investment property. So a little bit higher LTV than on the foreign nationals. So quite nice. We have a lot of specialty programs. If you have at least 5 properties, we can normally get you into a portfolio loan. So if you have multiple properties, and we've had clients that have had as many as 400, what a portfolio loan does is it really simplifies the whole process. I mean, if you think about it, I don't know how many properties you would own, but say you own 20 properties. Each property has a different due date for the mortgage. Each property has a different person or a different company that you need to write the check out to. It's a huge administrative task. By doing a portfolio loan, you're grouping all the properties under one loan, writing one check. Uh, it's a lot easier, not only on the monthly basis, I think, but on the annual basis when you're doing your taxes and et cetera. So portfolio loans, we do them probably 4 or 5 and maybe more a month. You need to have a minimum of at least 5 properties. The minimum value of the property in general, whether it's 5 properties or 10 properties or whatever it may be, has to be at least $500,000. Each property itself should be a minimum value, depending on the lender and the program that you want to qualify for, $50,000 to $75,000 each, what we call door. So each door has to be valued at least $50,000 to $75,000. Anything below that, they just choose not to deal with it. So even if you could have 200 properties, but the values are all quite low, it would be very difficult to get a portfolio loan. We also offer, and this is becoming increasingly popular. I think a lot of it has to do, well, I don't think, I know a lot of it has to do with COVID and just the general financial situation of a lot of companies or individuals. People own real estate, but they may be having a liquidity issue, meaning that you have an operating business and you cannot, you don't want to lay people off during this time, but you have all these properties, or you have one big property that you want to be able to extract the cash from. We can do these transactions purely asset-based, meaning that your current financial situation, if it's a bit rocky, it's not going to matter as long as we have the loan to value. We can do these transactions up to 70%, sometimes higher. Really depends on where the property is located. And it's purely asset-based. So issues like your credit, your cash flow, all of these things are not the factor when it comes to borrowing, strictly the asset. And we can open and close a transaction. We're doing one right now in California. It's 10 million, and we're doing it in less than a week. So very, very quick. I think you'd be surprised the rates are not that bad. I mean, it's certainly another risk layer, so you're not getting the prime rates, but it's still quite favorable. So can definitely get that. The portfolio loans, the standard residential loans, commercial loans. You want to buy a building or a shopping mall or something along that line, we have a lot of programs for this as well. So I think that pretty much wraps up the loan programs that we have, the new exciting announcements that of the programs that we have recently launched. Where America Mortgages is going from here is we're really putting a push into certain markets, such as Canada. We recognize that the Canadians are some of the largest, some of the largest investors into U.S. real estate, and they have the same issues as qualifying as you would have somebody from Hong Kong or Shanghai or Sydney. So we've been advertising quite a bit in the Canadian markets, as well as outside to globally. We are going to be adding more and more new loan programs. We're going to be adding a lot more interactive information on our website. But if you haven't had a chance to visit our website, I think you should. Our website is americamortgages.com. untitled.com, you'll find a lot of learning material on there. You're going to find a lot of case studies. I think you'll find a lot of people who are in a similar situation as you are, and you can kind of see how they qualified for the loan, what issues they had, and how it was resolved, if that was even a case. So yeah, take a look at the website. We always appreciate any feedback. If anything, is coming. If you have any recommendations or suggestions or whatever it may be, we're always open. So I think I'll open it up. I can see there's actually quite a few questions already. I'll open it up to some questions. Let me see here. Can I show my crypto portfolio for a money trail? Yes. Really, for the money trail, the most important thing is to just see where the funds have been for the last 2 months. The last thing that we would want, or the last thing that we would allow, is we don't want to see somebody's either their crypto account or bank account or whatever it may be, to see $500,000 pop in one day and then pop out the next day into escrow. That wouldn't be allowed, but all we would need to do is to see where those funds would come from. So yeah, absolutely. So what is the usual timeline for loan completion? So I just, we covered that a little bit earlier, and you're looking at, on a purchase and both a refinance, realistically, I would say 45 days. There definitely are, ones that close sooner, and there are, ones that maybe run into some slight issues and close a little bit later. But I think in general, you should probably target 45 days. Here's a question. Hi there, we're in the process of acquiring a property in the US as foreign nationals and had to submit credit reports from our home country. Once the mortgage is in force and the repayment commences in the US, will we as foreign national acquire US credit bureau profile? Yes. So one of the things that you would want to do is apply for an ITIN number. Once you have an ITIN number, it's going to act very similar as a US Social Security number, which will allow you to start building and acquiring US credit. So yeah, very good question. Question, what are the fees that you guys charge? It really, there's a lot of factors on that. In general, we charge what is a very standard practice in the US. If the bank is not paying us directly, we charge 2%, and that's 2% of the loan amount. What makes this really, this is actually a very good question. So our maximum loan to value is 75% for a foreign national, 80% for a US citizen. But specifically for the foreign nationals, because of the certain loan programs, we can you can finance any points that we would charge, which is say the 2%, into the loan. So technically your loan to value could be as high as 77% on something like that. Okay, more questions. Do you need a bank account in the US? You do not. It is definitely helpful if you do, but it is not required for most of our loans. Is the portfolio the same as a jumbo loan? It is not. So a portfolio loan is whether it's the acquisition of the properties or the refinancing of the properties or pulling equity out of the properties, multiple properties at one time, right? So, and then you're basically making one payment. A jumbo mortgage, it's a jumbo mortgage. If you talk about conventional financing is limited by county in the US. So it's not by state, it's not by city, it's limited by county, meaning that if you are, say, in take New York as an example, because there's drastic price differences in New York. So if you're in Manhattan, the conventional loan qualification before you reach jumbo is 700 and something thousand. If you are in upstate New York, where the cost of housing is cheaper, the conventional mortgage standard loan amount is 400,000, or that approximate range. So there's a big difference. Now, once you go over either of the conventional mortgage amounts, that's considered a jumbo loan. So they've got jumbo loans, they've got super jumbo loans. They are, pricing is a little bit higher. It's not much higher, but the qualifying standards and the qualifying requirements are exactly the same. So hopefully that answered your question. Can you buy all 5 properties at the same time? For a portfolio loan, absolutely. And we have this happen quite often. There are certain websites, or you can find this online, or there's a lot of really good realtors that are advertising, say on LinkedIn or whatever it may be. You can find people selling portfolios. So they may be selling a portfolio of 10 properties in Denver, or 20 properties in Philadelphia. You can finance that purchase on a portfolio loan. Now, the portfolio loans, the loan to values are on the max side, 70%, but on average, you should figure at least 65% loan to value. Do you need an LLC? No, you do not. I know that a lot of foreign national lenders or brokers require the borrower to close in an LLC. We do not have that requirement. What makes this quite nice is you can qualify, or you can close the loan in an LLC if you choose. That's your option, but there's no requirement. You can also close in your personal name. The rates, well, yeah, we've got so many loan programs. The rates are really just going to depend on a lot of things. So if you're talking about US expats, the rates are identical to what you would find online. But again, because all we do is foreign nationals and expats, the issues that you would have with the same rates that you'd find online, you're not going to have with us. So kind of put it into perspective for US citizens, the rates right now, and a lot of this has to do with Fannie Mae's announcement about 2 months ago. Fannie Mae announced that they were going to basically pull out or make it unattractive for them to be in the investment and second home business anymore. And a lot of that has to do with a lot of the forbearances that will expire. Once they expire, they do expect a lot of foreclosures, a lot of people that maybe can't make up this, the payments that they've skipped. So they're just kind of stepping away from it, and it caused interest rates for investment properties and second homes to go up. So there's no more sub 3s, unfortunately, but we have some really good lending options depending on where you're at. So I think it's logical that you would likely, again, it's going to depend on the strength of the borrower, but I think we can probably get you on a 30-year fix into the high 3s, which is excellent. I think it's interesting because interest rates have been so low post-COVID that there's almost this unrealistic expectation of where rates are. But if you look at things pre-COVID, which really wasn't that long ago, as a US citizen buying an investment property, my rate on a 80% loan, non-owner occupied, excellent credit, income, et cetera, was going to be anywhere from 4.75 to 5.25. So that wasn't that long ago that was considered excellent. I mean, now you're talking about, in the high 3s, so it's still absolutely fantastic. If you're talking about foreign national, Interest rates are normally the floor rate. It really depends on the lender, but the floor rate is going to be in the mid to high fours. And these are 30-year fixes too. So, I mean, you think just like, think about this. A foreign national, no US credit, income verification, quite simple, or no income verification at all. And being able to get a 30-year fixed rate where lower than where it was pre-COVID for a US citizen. It's absolutely fantastic. So, so the floor rate is going to be anywhere from 4.5 to, say 4.875, and then it goes up. The foreign national loans are almost strictly LTV driven. So it's really going to depend on the risk factor. Question, can you buy down the rate? Yeah, absolutely. So again, what makes us, I guess, super flexible, quite unique, very, very unique if you compare it to a bank or traditional bank financing. As a foreign national, or even as a U.S. expat, if you have a non-conventional loan, and you have a rate that, say, is higher than you would like, but you have a lot of equity left in that property, you can buy. Basically, you're paying a fee to the lender to be able to buy down the rate. What that normally equates to is, for every 1% of the loan amount that you pay. So as an example, if it's $500,000 loan amount, for every $5,000 you pay, you buy the rate down 0.5%. You can do that twice. So the most you can pay is 2% buy down to be able to reduce the rate by 1%. The lowest you can get, of course, is the floor rate on whatever that loan program is. But it's very easy to calculate when the break-even point is. And if you intend to keep the property for a long time, it's going to be part of your portfolio or passed down to family or children or whatever it may be, then buying down the rate is definitely an option. And we are absolutely super transparent on that. We show you not only what the rate buy down would mean, but when the break-even point occurs. Now on transparency, as the question here about closing costs, once your loan is submitted, you get a full breakdown of what the closing costs are. Now, the last thing we want is for somebody to think they're paying Y. They sit down to sign all their closing documents, all excited, and it's X. That's not going to happen with us. You're going to have a very, very clear and precise amount that unless, of course, you change the things as it go. But then it has to be redisclosed. So at every point of the loan, right when you apply for the loan, you get your approval, you're going to get a breakdown of closing costs. Right before you close your loan, you're going to get all your closing documents. You're going to see not only what the total cost is, but where every penny is spent. Very, very transparent. Would I be able to get a pre-qualification letter from American Mortgages? Absolutely. We do this probably a couple times a day, maybe more. So how this works is, even if you are considering buying a property 3 months from now, it's important before you start shopping to get pre-qualified for the loan. We're not just pre-qualifying you. We're not giving you a letter that says, okay, based on what you've given us, you're going to qualify for the loan. We're actually putting your loan through underwriting. We're getting an underwriting approval for this, and we're issuing a letter. So we don't issue a pre-qualification letter. We actually issue a pre-approval letter, meaning that when you go in, you're putting an offer in on a property, you hit them with this pre-approval letter. It's fantastic. And that can be very, very specific for, the specific property, or it can be a blanket. But it's very important before you start shopping for a property to get pre-approved. Which states do you see the most purchases? Do different states have different requirements? Very good question. I think if you look at just where foreign nationals or US expats are different, because a lot of people will refinance the properties where they lived, and that could be anywhere. But if somebody is buying an investment property, they're looking in states like Texas, Florida. California is popular just because it's California, and New York the same. Although there's higher taxes in both of those, but I would say most people that are buying purely for investment, Florida and Texas is really the hot states. Do different states have different requirements? No. So again, it makes it super easy. Say, and we see this a lot. A client calls up, and one of the loan officers talks to them, or I talk to them, or whoever it may be, and they say, hey, I want to buy a property in the U.S. I'm not sure if I want to buy it in Texas or Florida, right? For us, because we're doing loans all across the U.S., we're not asking for different requirements depending on which state you're in. We're giving you a blanket approval. So if you choose to buy a property in Florida, you choose to buy a property in Texas, it's the same pre-approval, the same qualifying standards. Do you send refinance? I'm sorry, do you do refinancing? They restated the question. We do, absolutely. So I think it depends on what your goal is for the refinance. If you're looking at just lowering whatever the current interest rate is, absolutely, super easy, not a problem. If you're looking to pull out cash, again, not a problem. I think what you'll find that, again, makes us very, very different and I guess much more aggressive than you would with other brokers or even a lot of banks. We have no restrictions on the amount of cash that you can pull out. As long as you have enough equity in there and you don't go over the loan amount, the maximum loan amount, then you can pull out as much cash as you want. We can get up to 70% loan to value on both a rate and term refinance, meaning that you're just lowering the rate or shortening the term, or 70% on pulling cash out of the property. So refinancing, absolutely fantastic way to go. Let me see. Who chooses the appraisals? Wow, I got a lot of good questions. This is really a good question, and I think we're seeing this. A lot of people are asking this lately, just because, again, people are sometimes offering as much as $50,000, $100,000 over the purchase price of some properties in some cities, right? I mean, this isn't affecting all cities, but some markets that are like ridiculously hot, people are going in and they don't care, right? Either it's a cash purchase or they have a really big down payment or whatever, so they're offering more than the property is technically worth. On those loans, you have to be aware that we, as a bank or a lender or whatever, they will lend off of either the purchase price or the appraised value, whichever is lower. So even if you offer way over the purchase price of a property, but the appraisal comes in lower, that's what they're going to lend on. Now, who chooses the appraiser is quite interesting. This was implemented along with many other things, but after the financial crisis. So pre-financial crisis, a bank or a broker or a mortgage lender, whatever it may be, could call up their local appraiser and say, hey, Bill, I need to get X amount on a property. Can you do it? Right. And so there was a little bit of influence by doing that. So that obviously has been corrected. So we have zero control over the appraisals. It's all handled through what's called an AMC, or an appraisal management company. And what we do is we fill out this document, we request the all the information that they have. You make payment. The payment, again, depends on which state and amount of the property, et cetera. And then it's randomly selected. So the appraiser will agree, hey, this is the one I want to do, and they select it from the AMC. Once they do the appraisal, they don't even send it to us directly. They send it to the AMC. AMC verifies it and then sends it to us. So that's it for the appraisal. So hold on, one more question. Under which jurisdiction are the loan and the loan documents governed? Everything is onshore. So for the US loans, it's onshore lending, onshore laws, onshore financing. You can make payments from overseas, but all of the documents and everything is all generated from the US. I think that is all the questions that we have. Hopefully I was able to answer everything that you wanted. And if you have any additional questions, I can be easily reached either by WhatsApp or by email. We also have on our website a corporate number that you can reach out to, or you can email directly at hello@americanmortgages.com, or myself personally, direct is robert.chadwick@americanmortgages.com. So thank you very much, everybody. I appreciate your time as always, and we look forward to a successful closing. Thank you. Bye-bye.